Okay, on today's podcast, we are talking about how to find value that isn't so obvious in properties, multifamilies, whatever. And we're going to actually use our first purchase or our first fund for Coachwood Capital. And we're going to use Canton Manor in Canton, Michigan as the case study of how I ended up finding some intrinsic value on that particular property that potentially people would kind of miss.
Yeah, for sure. I think, we talk about this quite a bit, but the ability to see things that other people don't see and get ahead of the market is vastly underrated in the investor community, in my opinion. If we use an example of the recent inflation rates, you've seen the news come out the last little bit, now that the governments of Canada and the US are admitting that they underestimated inflation. But I was listening to one of our podcasts, re-listening to it a couple of weeks ago, and we were talking 4, 5, 6 months ago that they were underestimating inflation and they were reporting lower inflation rates than were actually happening in the real market. And the problem is when you listen to statistics and when you listen to what the government tells you, not understanding that what they tell you is skewed because they don't want to look bad, it can leave you behind as an investor, if you get what I'm saying. So the objective hard data, number one, it's always lagging. So you're looking at past results of data. Number two, it's often just wrong or manipulated. So obviously you have to be good at running numbers. You have to be good at crunching data and whatnot. But the ability to see things outside of the data is a skill that I just think most investors lack because they don't think it's important.
So I think what you're trying to say is like how to use your gut.
Yeah,
it's
honestly,
a lot of gut
much,
feel. Like, and that's kind of how I've bought real estate the entire time. So,
now you understand the numbers too.
Yeah,
let's
of course.
not get it twisted.
Well, it's the numbers that actually like attract me to the building first.
Yeah.
Like, to be quite honest, like I don't go to these properties. I don't go to them until I like the numbers first.
Yeah, it's a good point.
I like the numbers. I like the sub-market analytics. I like the market analytics. I like what's happening in the vicinity of the property. I like the property itself, or there's some sort of value add. I like what's going on prior to having to go there and get a gut feel. Like when you go there, like with regards to our previous couple, like I don't even know what podcast this would have been, but I referenced what I've done in the beginning when I was buying property, where I would like sit there on like a Friday or Saturday night from like 1 to 3 a.m. or 1 to 4 a.m. or whatever, and I'd walk the neighborhood. You can't, like, numbers won't show you that kind of shit, right? So even what we did, I guess we'll get right into like what I did and what attracted, what like legitimately attracted. So, okay, when I went to Canton, I obviously liked the numbers. Okay, so number one, a couple things that I liked with Canton. The cap rate, it had a solid cap rate. I'm getting fucking lit up on my phone right there. It had a very attractive cap rate. Obviously, that was number one. It was a 55 plus community, senior community, which I love. So I probably about half my portfolio is actually like not necessarily like zoned. It's not zoned senior communities or living, but it's mostly like ranches, right? Like side by side ranches or whatever the case is. So I have a lot of that. And seniors like that, right? Main floor laundry, shit like that. So there's like a small HOA. They take care of your snow, like that kind of shit, right? Like they don't want like the maintenance, stuff like that. So I have a lot of that. And I love like the senior demographic. There's no problems. They're respectful. They don't leave. Like it's a lot of
Actually,
that.
I remember when you were first telling me about this building and you said it's 55 plus.
Yeah.
In my mind, I was thinking, well, 55 plus, they're not the high income people. They're not with the tech jobs. It might cap your growth. Like those were my initial thoughts. And then once you started diving into it a little bit more from experience and the other side of the coin, the ability to like look at things a different way, said, no, those are the perfect tenants.
Yeah. So there, you are right. You're not at the highest end of the market. Okay. So you're not getting like the highest rent.
Yeah.
But what you're getting is like a much more stable rent. So you might be, maybe even 5 to 10% lower than, maybe not even that, but you might be call it 5 or, for hypothetically speaking, 5 to 10% lower than market rate if that wasn't a 55 plus. But what people don't understand is the velocity of like vacant units is much less.
So you've got lower vacancy, lower maintenance and repairs. You've got longer tenancies. You can still raise the rent with the market.
People in that demographic don't necessarily care as much as having like the most updated units.
It's
like
a great point.
that kind of stuff.
You don't have to come in with big capex.
Exactly. Like the capex is much lower. What else? So let me get into. Okay, so cap rate 55 plus based off experience of my existing portfolio. I loved it. Okay. Surrounding homes in the area were like 250 plus at that time. Now they're like threes for sure. But we're talking like very nice all brick ranches, raised ranches, 2-story homes, like literally down the street. So you had a very affluent kind of neighborhood rate in that vicinity. You also had a situation where the average household income, not the average, but the median household income was like $100,000, which in the United States,
it's a high income.
That's a high income. So that's a high median household income. I think the median household income, like spread over the entire US, is like in the 60s. So that's what attracted me as well. Also, what else attracted me to that building? The fact that it was all brick. It was a 6-story, and the like overall appearance, like the curb appeal of the property was like really nice. It's like a really nice looking property. Okay.
Well kept, well maintained.
A little bit deferred maintenance because there was some bullshit with the previous ownership. But nonetheless, a very nice looking building. Right. It's a building that I myself, if I was taking somebody, like say for example, like anybody, if I was bringing anybody up to my place and I lived in that building, I wouldn't be like,
I own this.
Or not even own, like, I live here like not be proud of it.
Yeah, for sure.
Now let's get into the things that weren't on paper. When I walked up to that building, I guess the curb appeal was one of the things, right? So, but when I walked up to the building and I was talking to people, like everybody loved living there. Like everybody really, really, truly loved living there. You're not going to get that from analytics, obviously. Another thing, when I walked into the building, I've never been into a multifamily, especially a multifamily, where people had like planterns outside. They had like really nice wreaths or something hanging on their doors. And I'm not talking like, 1, 2. I'm talking like at least every other unit had like something nice on every fucking floor. Like you don't see that ever. I've never
not in large multifamily.
No, I've never once in my life actually seen that. And it wasn't like Christmas time. It wasn't any of that shit. It wasn't like Halloween. It wasn't like a justifiable holiday where people would put shit outside of their unit.
You've got renters treating it like it's their own personal residence.
It felt like what was happening was that I was like walking up to someone's home that owned it, right?
Not
like
a rental.
Like welcome mats out front of their door. Every single floor had like this little book center where people donated reading material at like this end of a hallway where there was like a seating area where people could go there and like read books. You know that like in a shit building that shit would be gone. Like so and they never have a problem. And then there's also like these little knickknacks, like little ceramic knickknacks there that people kind of like donate that people like. And I was like, holy fuck, I need to own this building. Like based off that. A lot of this was like the turning point that I was like, the numbers are great. And even if I was 50-50, I was like, boom, I'm buying this building.
I love it. You know how many people would have walked in there and then said, oh yeah, I like all these things, but the numbers just aren't high enough for me. And the numbers were good. But because the opportunities in the US are sometimes much greater, they might have looked average to a regular investor. And I work with a lot of beginner investors. And when I take them to the nice properties that are a little bit more expensive, what do you think their response almost always is?
The returns aren't
there. The returns aren't high enough. And I say, but X, Y, Z, you've got great schools here, you've got the riverfront there, you've got this, that, this, and they won't hear my subjective analysis and they'll discount it as 0 and then they'll go buy a piece of crap on Windsor Avenue because it has a 9% cash on cash return.
And what they won't realize is that because they bought that piece of shit on Windsor Avenue, you're getting turnover like fucking crazy, and people skipping out on rent. They're damaging the property. Like your
like, on paper return does not equal your end of year return.
Let me just get into something that people maybe don't realize is that like people could lie, and even when I buy these like really large multifamily buildings, like the sellers could lie. Like there's nothing holding them to not lying.
Yeah.
And even for me to actually go back on them and sue them is like a fucking uphill battle. Like
probably wouldn't be worth it.
No, it absolutely wouldn't. Like I've talked to real estate lawyers about this in the States and in Canada. Like you can't, like people can lie, and people do lie. Like you think a duplex on fucking Windsor, like someone's coming at you with like every single expense that goes into that fucking thing. No, like, are you serious right now?
Yeah, they're not disclosing cabinets.
No, of course not. They're just what they're doing. They're just throwing some fucking numbers in an Excel spreadsheet.
You know what I'll see a lot too is they'll get a tenant in there at a really ridiculously high rent, above market rent for that area.
Yeah.
And it'll fool an investor to thinking, oh, that's market rent. And I'm like, that's a huge red flag. If you're getting $2,000 on a duplex on Windsor Avenue, there's something fishy going on. It might be a friend that they got in there on a lease.
Yeah.
They're not going to be paying 6 months from now. So, but only looking at the numbers,
of course,
is a very dangerous game to play.
For sure. So that was like the intrinsic value that I saw. And then I guess we can even go into like there was all kinds of amenities. I mean, that's an analytical thing too. You could look at that on a map and stuff like that. That's also something that I want to make sure of, especially for senior properties. I want to make sure it's not necessarily like everybody needs a car, because a lot of seniors, they don't use cars. Yeah. Like they don't have cars.
Can't drive
they can't drive. Some intrinsic value that we found in Miami for North Miami Beach, the property there, the Bayview Palms opportunity that we have going on, talking to tenants. Like we talked to a handful of tenants, specifically women, and even older women, that we want to make sure that they felt safe. And like, what was the response?
Every time. I love the neighborhood. They're out walking their dog at dusk, right? Right in front of the building, without pepper spray out or something like that, because they're afraid. Like they were and older people, older women, the tenants that we talked to as well. And everybody needs to know this isn't the only building that we looked at. We looked at other buildings that maybe didn't pass the subjective test, right? The numbers worked, but then we go there and see the quality of tenant is a little bit lower, and then the location might not be as quality. And there's this red flag and that red flag that if we didn't investigate, we could have possibly gotten ourselves into a situation. But even another one that we did is go talk to the police officers there. Which they're going to know things that don't show up in the data. They're going to be able to tell a story. And I love what you said as well, is the police are going to tend to over-exaggerate problems. And some of the police officers we talked to, the one guy we talked to was the worst he could say is like, oh, there's like a car break in here and there, whatever. So little things like that.
Then that wasn't even North Miami. That was a property.
Yeah, it was a different
that was actually a property I had locked up. Actually, a portfolio of properties in Coral Springs.
Great location, but maybe some of the subjective stuff just had us on edge a little bit. Again, it came down to probably quality of tenant, a lot of Section 8 people and stuff. And Section 8 can be good. But it has to be,
the reason why we didn't pull the trigger on the section or the Coral Springs property was predominantly because we didn't feel right about selling it to our buying pool. So, or our potential investors. So it wasn't something that, we felt comfortable for one of our, our second property. It's not to say that I wouldn't do it. But it wasn't something that I wanted to introduce as like the second package of properties for the second fund.
Especially without a clout for Coachwood yet and all this stuff to come at people and say, hey, it's a mainly Section 8 building. It's going to raise a lot of red flags. But we liked a lot of stuff there. The numbers were great. The location was great. That's where we talked to the police officer. And Section 8 housing in the U.S. isn't like social assistance here.
No.
It's a very solid capitalistic program in a lot of ways. Right?
Really
you don't pay your rent. You don't get Section 8 anymore. You're out.
You have to pay. You have to make. You have to pay your debt to the landlord for your payment.
Or they'll kick you off Section 8.
Or they'll kick, or at least they won't allow you to leave. Not leave. They won't allow you to get into a new property that is a Section 8 property. unless you repay what you owe to the previous tenant
So
or
it's
the
actually
previous landlord.
It's a really good program. So there are a lot of things that we like there. But
I do actually, yeah.
So for me, it has to meet both criteria. It has to pass my subjective analysis, which is through experience, right?
Yeah.
Like I've gotten good at analyzing things. I know what works. I know what doesn't. I know what areas I want to be in. I know what kind of tenants I want to attract and what kind I don't. And it's not that hard.
Yeah.
Would you say it's that hard to walk a neighborhood?
No, of course
get
not.
A vibe?
And I say this all the time, and I know you fucking chirp me about this, but it's about like the my gut feeling is has a lot to do with whether or not I would actually live in that area or in that property.
Yeah, for sure.
Right?
For sure. Yeah.
I don't have like, I'm not looking to live, you have to look at it from an objective, perspective. I'm not, you can't go in there expecting to like live in the Taj Mahal or anything like that. But
you can't. This is another problem I see with some first-time investors, especially, is they take their standard of living and apply it to a rental.
Yeah, you can't do that. Yeah.
You need to like understand the tenant of that property and who they're going to be.
Yeah.
And if you were in that situation, like a middle class wage earner having a difficulty buying a home, would you live here at that rent rate?
Yeah.
Not too hard to do.
Yeah.
But it is easier said than done for people without experience.
So there's three things that I kind of really look at when I'm qualifying for like essentially like a gut feel. It's safety, cleanliness, maybe four things. Safety, cleanliness, state of repair is important as well.
Love it. Yeah. Underestimated.
And amenities within the localized area of the property. Those are kind of the four things that I kind of look at because, some people, renters, they don't drive or, they want to walk to places or maybe they do drive, but they don't want to like, drive all over the place. And cleanliness, I'm a clean person. I like to at least feel or be clean. I don't want to walk into a dirty ass place. Yeah. Safety, you have to, put yourself in the place of a, single mother or, even a family where there's kids and, if the kids want to go outside and play, are they going to be safe? That's a big thing. And, state of repair. You don't want to be in a building that's falling apart.
Yeah. And a lot of the subjective analysis is the ability to predict the future before it shows up in statistics on a more broad scale, right? Like in Windsor, we're local experts. We know which areas are up and coming because we're out there. Like we see Walkerville, for instance, all those cool restaurants and shops are attracting the next generation, like the millennials, to want to live in Walkerville. I see it all the time. We were onto that 4 or 5 years ago. Now the prices have caught up to our original thesis, and we're applying the same principles to all of the U.S. and specifically Miami and Canton and all those things. What are the bigger picture things that are going on in the U.S. that aren't showing up in the statistics right now? We harp on this all the time, so we don't need to get into it. But like big government policy, Democrat versus Republican, immigration, what are their policies? That's not going to show up in the statistics for a year or two. Yeah. When you have people coming across the border in droves, the rent increases aren't going to take place immediately. It's going to be a year or two down the road as they absorb supply. Yeah. But we're seeing what's happening. And most people just, for some reason, they only believe what statistics and the news tell them. They are unwilling to listen to anybody that's not a top. The guy on CNN isn't an expert. He's just reading a script. Yeah. Okay, he's a teleprompt reader. That's all he is, right? And they make him famous. So people somehow believe that guy. He doesn't know what he's talking about. Yeah. He's told what to say. Yeah. So if we're not on CNN or some big platform, they won't trust our analysis, or anybody else's analysis. And I keep telling people, this stuff isn't going to show up in the stats for a year or two. That's why we think we're so early in Miami. Yeah. And that's a lot of...
We were.
Yeah.
We were.
And also on Canton, too. Like, how much have you increased the value of that building?
Oh, probably...
in 6 months, 8 months?
Yeah, probably... Well, at this point, I closed in January, like late January. So, like 10, 11 months, like $1.5 million.
$1.5 million. Yeah.
About
on a $3-4 million purchase.
Like, yeah.
You're talking like 30-40%.
Yeah, it's close to a $5 million building now.
Yeah, that's incredible.
Based off a cap rate, right? A localized cap rate. So, with respect to Miami, like I knew this was going to happen, right? So North Miami Beach and North Miami is more of a blue collar kind of area. Seeing all the growth of Miami. And what was happening there with all of like the tech jobs going there, all this happening there, all the careers, all the jobs, like everything happening in Miami, I knew like people are going to start moving north. You don't have an option to go south because south is more expensive. In Miami, right? So South Miami, even as you go down to the further you go down in like the Miami area, the more expensive it gets. So the only option was to go north, right? And north is North Miami, and North Miami had still very reasonable prices. So I was like, fuck, I'm gonna look at this portfolio here, look at this building. It's so insanely like reasonable still. I guarantee you in 6 months to a year, when with Miami exploding, shit's gonna start moving north. The values are gonna start creeping up or exploding up, really. And then lo and behold, what happens? 6 months later, while we're still fucking working out the closing on this property because the market there is nuts. North Miami Beach gets rated the 7th in the entire United States for rental growth. Was it rental growth? I don't remember exactly what it was. It was either rental growth or value per unit in the entire United States, ranked 7th, not in Florida, the entire United States for growth. In terms of, I believe it was for unit value growth in the entire United States, North Miami Beach. I fucking knew it was going to happen.
Now, anybody could come up with that thesis if you just like put your mind to it for a little bit and say, holy crap, this is what's happening in Miami. North Miami still, because you can't invest in Miami. That's the problem. Unless you're a big shot, you can't get returns there. It's too expensive. So we have to look for like the next play, which we think we bet. And then you have to be willing to like do your analysis, objective and subjective, right? Which we did. Okay. So part of the subjective analysis is walk in the property. What's around there? $1 million home, $4 million home, waterfront, 10 minutes from a major beach.
It's isolated. It was in the backyard of like $2 to $6 million homes. Very safe pocket. 20 minutes, 15, 20 minutes to Miami. So people could still work in Miami and live there. I mean, it was, I had people, but it was crazy too, because I had people like, oh, no, I would never invest in like,
exactly. Cause they're
North Miami Beach. This now I'm like, listen, fuck, like this is happening. This is happening right now. And I would tell them, I would be like, well, do you believe in like Miami? And they'd be like, of course. And I would say like, well, North Miami Beach is part of Miami's MSA and it's fucking expanding. So what do you think is going to happen?
15 minutes from Miami.
It's 15 minutes. Like how many people, we talked to multiple people in that building that work in Miami.
They're unwilling to listen to anything subjective. They're unwilling to listen to anything that isn't a hard data point. They will not even consider it. And that's why so many people have been behind on Windsor's market and Canada's market in general. That's why they're going to continue to be behind in the US, even though we come on here and tell people that they're 4 million homes short. That's Fannie and Freddie's statistics. They're 4 million homes short across the US. Miami's exploding for the reasons that we talked about. It's not going to show up in statistics till 4 or 5 years down the road. It's happening, but it happens kind of slow, even though it is actually pretty fast, 4, 5, 6 months sometimes. But people just keep missing it and missing it and missing it because they're unwilling to like go with their gut. They're unwilling to listen to the subjective analysis.
So part of like our advantage as well with Coachwood Capital is also I leverage private, not government funded, but privately funded software analytics. So
it's a good point. Not government.
It's not government. So they don't rely on their government information because that shit's slow. Like mainly what you're talking about is government stats, right? I leverage software, which still could be, potentially, months behind. At least it's not years behind. But I leverage private sector software analytical data that's typically faster. And the way that it is faster is because they use real time, apartment rental rate data. They use real time, analytics for submarkets, markets, the housing market, things like that. News. They get a lot of like they're very real estate focused
own,
news.
Like one of the websites that does rent, like apartments.com.
Apartments.com.
So they're
LoopNet,
getting real time
CoStar.
data.
Like they own
real time.
They're getting like real time. Like they know when someone lists an apartment for X amount of dollars on apartments.com, which is like the largest apartment rental website in the United States. They know when someone accepts that rental rate, they know what the essentially market rate of that rental unit is at that point.
Whereas the government's probably doing paper censuses and all that.
Yeah, they don't know shit.
You're a year or two behind if you listen to the government.
Fuck, that's even a stretch.
Yeah.
So again, we leverage that, but I also leverage and we also leverage like the subjective stuff, right? Like the gut feel stuff.
You know, a lot of that comes from experience, not just in real estate, but running multiple businesses. You've seen so many scenarios, you've seen so many different things that you could, and also the ability to trust your gut. And, oh, this is huge. This is huge. And I, you know, I'm guilty of this all the time. 10 years ago, I thought Bitcoin was an interesting thing. I'm like, oh, I like the fundamentals of this. 21 million coins. Like, I should just take a shot and do it. But I didn't trust my gut feeling. Cost myself. Everybody can say this, but we all do this to a certain extent. But I'm learning more and more to like shut my mind up and go with the gut. Understand the numbers and run them, of course. But ultimately, it's your gut that's going to make the decision. And people that can't trust their gut, they either do nothing or they do very little. Because your mind will usually talk you out of it. Yeah, I see it so much because I'm a real estate. You know, you only have to worry about most of yourself and your business and stuff. I'm trying to help other people do it. I just keep running into the same hurdles over and over again. This mind block. Yeah. You know, I'm working with a kid now that's gone to like 6 different cities trying to invest, and he keeps losing offers. I'm like, because you're trying to bully your strategy into the market. I'm like, this is what you need to do. Yeah. And it's just this wall. I'm like, look, man, if I go to the doctor, I don't tell the doctor what he should do for me. I listen to the doctor. I'm the doctor here. I'm telling you how to operate in this market. He's like, yeah, but it has to be. I watch a YouTube video. I'm like, how many properties do you own? 0. Yeah. Okay, listen, man. This is what you can do. This is what we've done. This is what you need to do in this market. But the data, that has to be the 1% rule. It has to be a burst strategy. I have to get my capital. Is
that what these guys are going for? They're doing something. They have to do something.
They have to do what the YouTube told them to do.
The YouTube experts told them
because they're on YouTube. I'm like, look, man, those YouTube videos could have been 10 years ago filmed. Yeah.
Or they could be by somebody that's fucking, number 1, lying. Yeah. Or number 2, just doesn't know their shit. Yeah. Or number 3, just doesn't know their shit for the market that you're trying to be in. Yeah. Like, and if
I was doing a flip video, I would make it look really easy too, just like we see on HGTV. Yeah. So you're coming into this thing thinking it'll be easy. Yeah. In an environment where you can't even get somebody to come look at your roof, at your personal property.
Yeah, at least on time. Yeah, he's there now, but fuck.
Yeah, so it's a super difficult environment to run those things, especially as a beginner.
Even with so I just locked up 10 building lots for our development company, right? Yeah, and like the buy-in price is the lots will be available probably next summer, but the fucking buy-in price is like egregious right now.
Pretty high, yeah.
It's pretty fucking high. But
it's market.
But what it is that it's market now.
Yeah, exactly.
So I'm getting in, 6 months prior to the start of the build, right? Which I might look like a fucking genius. So that's where I gotta, my mind is telling me no. Yeah. But my gut is being like, well, at the end of the day, is this market going anywhere? Yeah. Not in 6 months, I can tell you that, or not in a year. So you might as well just fucking go ahead and do it. Yeah. So that's my gut right there.
Yeah, and also part of that too, like the gut level analysis.
There's nothing even available.
You mentioned some other factors that aren't hard data point. Yeah. You mentioned the ability to get a relationship with the developer. Yeah. Build their trust. Okay, that's not a hard data point. That's subjective. Yeah. So for future opportunities, they're going to come to you potentially. Yeah.
They're already saying that they will. Like if we do if we do a good job and things are smooth and they already like us, they already want to work with us. So once they do phase 2,
so if you don't pull this trigger, guess what happens when people come to me and they talk a big game and then they don't do what they said they're going to do. Yeah. I just know you're not that kind of guy. Yeah. But when you come in and
you're not going to waste your time.
Yeah. Do it. So you built their trust already by just by pulling the trigger, right? Which is what this podcast is all about. Yeah. Number 2, opportunity cost. If you don't do this, you might miss out on 6 months or a year of experience of running the projects, of getting the crews together, of getting your workers busy. There's a lot of things that are not just how much does the lot cost me, how much can I build it for, how much can I sell it for. There's so many other factors, and if you only look at the one, which is, hey, these lots are expensive, your mind's going to talk you out of it, right? Yeah.
But we're wired to find deals, right? These lots aren't a deal. Yeah. Forget it. You're not getting a deal in this market. You're not. There's no deal. So you're not. Yeah. That's kind of why I'm swinging towards developing at this point, right? I'm not really doing the whole. That's why I'm going to the US for the rental stuff. But because in the end, I'm gonna make the sweat equity return on development, whereas. That's the return that I'm after now, not necessarily the actual rental return in this market.
Yeah, well, with this kind of appreciation until it cools down, that's the play.
Yeah.
Now, let me ask you this.
which I don't like, obviously.
You know what? It's not normally our game, but we're willing to adapt to the market.
You don't have a choice.
Now, let me ask you this, because that's pretty exciting. Coachwood getting into this, pretty big development stuff.
Yeah.
Do you have any thoughts of ever opening this up to outside investors or anything like that? Or is that kind of...
Yeah, I think so. I think I would approach this the same way as we did, as we're doing the U.S. Rental property stuff. It's going to be almost kind of like an invest and hold scenario, because obviously developing, building homes or doing whatever, you're putting money up front and then you're getting your money back. Like the return is once you like sell, right? Obviously, so it might be like a year process, maybe even a 2-year process, depending on like what the fund is or whatever. It might be a scenario where I put in the money to hold the lots, and we need investors to comp the build, right?
That'd be
of
really
the homes
exciting.
or something like that, right? Where on one home, these homes are going to be worth over $1 million, and on one home,
I think well over, but yeah,
probably, yeah. If these homes are over $1 million, it might be a scenario where each home you're profiting $200,000. You know what I mean? Maybe I don't know what that number is going to be in 6 months, obviously, but I'm willing to bet there's going to be some pretty big, because there's risk, right? You're not necessarily timing the market, but you're hedging your bet on the market. It's not going to move, or it's going to continue to increase. And if not, you're fucking holding the bag, right? You're holding the bag. You got X amount of dollars. You can't go back and be like, oh, well, the market is tanking right now, or it's on a downside, and I paid too much for the lot. Now I'm not going to pay you. Now you got to renegotiate the price of the lot. That doesn't happen. It's not going to happen that way. So I know people that in the last downturn, they got hurt that way, right? A lot of developers, actually some that we know. Home builders, they had too much inventory and lots, and the market turned and they got fucked. So there's a lot of risk, but the reward, it's a timing thing, right? It's do you want to own property that's providing you cash flow, or do you want to take that a little bit more of a risk for potentially a bigger payout, but you're not getting any kind of cash flow in the meantime.
That's always the case, right?
Yeah.
I love this analogy. We're playing a game of poker.
Yeah.
Texas Hold'em. I've got a couple cards in my hand. The flop showing me 400,000 people a year. We're short houses. Buildings too expensive. Not enough houses for people. A lot of money in the world right now. If I've got pocket aces in my hand and somebody puts me all in, I'm going all in, right? Yeah. And if I bust out, because it's not that I made the wrong bet, it's that it was just bad timing. But I'm going to continually make the right bets based on the data and the subjective analysis in front of me. Yeah. And that's why I keep saying the best poker players, they don't win every time, but they consistently win because they make educated bets based on, that's my phone, fundamentals consistently over a long period of time. They consistently win, but they don't win every time.
For sure.
And that's the best we can do.
That's why I like, so from my perspective for Coachwood, there's a reason why I'm going to the US for rentals, is because that's what I personally wanted to do. And if I wasn't opening it up to investors, that's what I would be doing regardless. Yeah. It didn't matter.
For sure.
And number two, locally here, because I'm going to the US for rentals now, and I'm not necessarily all that much all that focused on rentals here locally. I'm getting more focused on development. So naturally, I think I will open it up to investors eventually, because I do want to do like development to scale. I personally have property that, we can start building, not now, but like, in the very near future, we could start building, large condo builds. So I own some industrial property that we could start doing that with. I'd knock the buildings down and use the land to build, develop condos. So we can do that. My development license allows us to do it to scale that large. So that's like, amazing. High-rise condos. So, mid to high rise, something like that, whatever we can get zoning for. But I think I would probably open it up
and
to
this is essentially how, big builders do it. Yeah. One of my colleagues just got into it's a project going on in Toronto, a new construction, big tower. It's not going on for 5 or 6 years, but they've opened it up to kind of friends and family. So they're ground level investors in this project. Yeah. And of course the projected ROI is, it's pretty significant, 400%, stuff like that. Yeah. But most developers don't have unlimited capital. They're going to be raising it from the market in one way or another. Yeah. And I think that's super exciting, man. So whoever's listening to this, stay tuned for those potential opportunities.
For sure.
Because I would be, I don't have the capacity to go develop stuff. I don't have the time or the will either, let alone the financial resources. But the opportunity to like get in on something like that would be super exciting.
Yeah, I think I'm going to do it.
I think a lot of people would be excited.
Yeah, I think I'll probably do it. I don't know what stage I'm going to do it at, but I think I will end up doing it.
This guy's a beast. Love it. Awesome. All right, I got to wrap up, but
Cool.
All right, cool.
That was good.
Trigger.